The basic business model of retail goes like this: buying merchandise in large quantities from wholesalers or manufacturers at low price, and selling it in small quantities to the general public at higher price. The difference in price is called gross profit. This gross profit is then used to fund and pay the expenses of the operations and key activities of the business in order to provide such service to the public. And the remaining amount at the end is the net profit. Let's get deeper into the details of such business model, and we are going to use the 9-block business model canvas template for that. And here I am going to explain it through a hypothetical retail business. Let's call it Organics, which is a store that sells organic food and produce. We start by defining the value proposition. What is the unique value I am providing the final consumers that will make them come and buy from me? I am giving them a nice product assortment of organic food. I am giving them a convenient way to shop such products through the stores and our website, and I am committed to provide them fresh products every day. What are the sales channels I am going to use? I am going to operate brick-and-mortar stores. I am going to sell through our e-commerce website, and I might launch pop-up shops from time to time. What are the customer segments I am targeting? I am mainly targeting health-conscious consumers who are interested in buying organic food. What key activities do I need to perform in order to deliver this value proposition through those channels to my target customer segment? I will need to source products. I will need to do marketing and branding. I will need to operate retail stores and the e-commerce channel. I will need to manage merchandise flow. And finally, I will need to manage the sales process. So what are the key resources I am going to need to do all this? I need to rent retail stores. I need to rent a warehouse facility. And finally, I will need human resources to perform all the above-mentioned activities. How am I going to manage customer relationships? I will probably need to have customer service function and will need to invest in a CRM software. What will be my key partners in running such a business? My key partners will include the product manufacturers, the wholesalers, and my landlords. So now, after we have laid out all the different components of the business model, we come to the key part, and that is how are we going to make money? For that, we need to identify our revenue streams and our cost structure. Our revenue stream is the product sales through the stores and the website. And our cost structure includes cost of goods sold, that's the merchandise cost, store rents, paying for logistics and warehousing, employee salaries, and marketing and advertising costs. This is an example of the main business model for retailing. However, retailers don't necessarily need to stick to this business model alone. They can get creative by tweaking such business model in order to grow the business or add more revenue streams. They can use the same 9-block template and start testing different scenarios to tweak the business. For example, Organics might add a subscription component where customers can subscribe and get weekly deliveries of their shopping list with free shipping. So in this case, we can add the subscription revenue to the revenue streams. But in order to do this, we need to think about the other components and see if we need to add to them as well. For example, offering such subscription might need us to invest in owning and operating delivery trucks. So in this case, we will add delivery trucks to the key resources and delivery to the key activities. Another tweak to the business model could be to add a consignment component to it. That is, by allowing other sellers to come and showcase their merchandise at Organics and sell to our customers in return for a commission on each sale. In this case, we are going to add commission to the revenue streams and add the sellers to the key partners. There are endless possibilities of how retailers can innovate and tweak their business models to grow their business. I'm going to leave a blank template for this canvas for you to download from the attachment. So you can test different business models and ideas, and if you want, you can check out our Retail Growth and Expansion course, where we get deeper into business model innovation and present different alternatives inspired by other retail and non-retail businesses. So check it out. In the next lesson, we are going to explore the different functions inside the retail business and learn about In order to deliver the value proposition to the customers, a retail business needs to coordinate the different functions of the business to achieve the desired outcome. There are two types of functions: the core functions and the support functions. The core functions in retail are buying, merchandising, warehouse operations, and retail operations. The support functions are the functions that support the core business and build the firm's infrastructure, and these include marketing, HR, finance, and IT. Let's take a deeper look into how the different functions integrate. In order for the business to create a unique product assortment, which is the main value proposition of the business, it needs to identify and source such products at a reasonable cost price, and this is done by the buying function. However, for that to happen, the buying function will need to have a buying budget, a dollar amount that they are allowed to spend on sourcing the merchandise. This is done through merchandise planning, which is also part of the buying and merchandising functions. Merchandise planning creates an outline for what needs to be sourced in order to deliver the sales budget and gives the buying team the amount to source with. And then they choose the individual products and suppliers. But how does merchandise planning know how much inventory we need to buy? This is based on two things: the existing inventory level that we currently have and the forecasted sales that we are expected to deliver. Then a certain amount of new inventory needs to be purchased to support those sales figures and make sure the business has enough inventory cover. The sales figures are obtained from the final sales budget of the business, which is prepared by the finance function in coordination with the operations function. If you've worked in retail operations, you might have found an assignment coming to you asking you to submit a forecast of how much your particular stores are expected to make for the next period, for example, next year. This is used as an input to create the final sales budget of the business, which is the main foundation for all the other budgets, including the final P&L budget as well as the buying budget. We explain this in more details in the Retail Budgeting and Planning course, so please refer to it on how to create such budget. Now that we have the buying budget and merchandise plan, and the buyers have gone and chosen the products to source, these products then get allocated to the stores in adequate quantities that are fit for each store, and after the initial allocation, they get replenished on a regular basis. The warehouse operations function receives the order of allocation or replenishment from the merchandising function and starts processing it by preparing the merchandise and then delivering it to the stores. The operations function at the store, in coordination with the visual merchandising function, then takes the merchandise from there, and from here another merchandise flow cycle starts inside the store itself. The primary goal here is to sell the entire inventory allocated to the store on time with minimal markdowns if possible. This goal, however, is not always obtained, and in many cases the merchandising team needs to use different strategies to accelerate selling the merchandise on time, so that the new collections can be launched in the stores also on time. To do this, the merchandising team needs to generate and monitor certain reports on a regular basis to see what's selling and what's not selling, and to decide on the options they need to take for those products. Apart from managing merchandise flow at the store, the operations team is also responsible for delivering the sales targets, delivering a great customer experience at the store, and maintaining the brand standards at the store by operating according to the company's SOP. Throughout the entire process, the support functions operate behind the scenes to support the core functions. For example, the marketing team works mainly on driving traffic to the stores and on building the brand equity and positioning the brand in the minds of the target market. The HR team facilitates the hiring of talent and the talent management and development process. The IT team makes sure the business has the adequate IT infrastructure and that it's maintained all the time. The finance team manages all the financial aspects from budgeting to final reporting. This was, in a nutshell, how the different functions work together to deliver the value proposition to the customer. In the next lesson, we are going to explore the key success drivers for such a business. There are three main keys to success for a retail business. These keys are the need, the right numbers, and the customer experience. In order to create a value proposition, the business first needs to identify a need that is not filled by other businesses in the market, or is not filled in the right way. To do this, the business needs to identify a specific market segment to serve, and then create an assortment that will appeal to this segment, and then position the brand in the target segment's mind so that they can identify the retailer and buy from its stores. If we continue with the same example, Organics has identified an unmet need in the market. It realized that there is a sizable segment of consumers who wish to be able to eat organic food only, and the different grocery stores in the market are not filling this need for them. At the same time, those consumers cannot go and try to source from farm producers on their own every time they need to buy fresh produce. So Organics has decided to create a product assortment of organic produce only and brings this assortment closer to this target segment by opening brick-and-mortar stores in their areas and by serving them through its e-commerce website. Then the marketing team at Organics will go out and create marketing activities that will position the brand in the minds of its target consumers so that they will come to the stores and become customers. However, in order for such business to succeed, all the numbers need to work together. Organic produce, for example, is not cheap, so Organics need to make sure it sells this product at the right price and maintain the right gross margin that will allow it to pay for its operation and generate a profit at the end. Organics customers are well off and can afford a premium product like the one Organics is selling. They are also open to pay for a premium delivery service on subscription basis, which will further increase Organics' revenue. But what about a retailer serving value-oriented customers, which is a bigger market segment but will require them to sell at low margins? A retailer that decides to serve value-oriented customers with low-price products might find that in order to deliver profit at the end, the business needs to turn its inventory faster, so that it can be able to sell at lower margins and still deliver net profits. If you look at discount retailers, for example, you will find that they have higher inventory turnovers. Same is the case for grocery stores and pharmacies, because they sell at low gross margins. Check out our benchmarks page for more details. I'm going to keep a link in the attachment. So the key is not that the gross margin needs to be high, but rather how all the numbers need to work together to generate final profits. This requires an understanding of retail math and how all the metrics are calculated, and more importantly, how those metrics relate together. We have compiled a cheat sheet for the most used retail math formulas. I'm going to leave the link to it in the attachment, and for an in-depth study of retail math and how the metrics work together, I encourage you to check out our Retail Math Fundamentals course. The final key to success is great customer experience. You could find an unmet need and serve it with a great assortment at healthy margins, but for the business to sustain and grow, and also to defend it against the competition or new entrants, you need to be acquiring more customers and keeping the existing ones without churning. The key to that is great customer experience, both at the stores and afterwards. This is done by building and maintaining elaborate standards and SOPs for your retail business, and hiring a skilled operations team that knows how to maintain this experience throughout the different stores. A great customer experience completes the cycle of the success triangle and ensures that the next time the need arises for your target consumers, they will be choosing you again and giving you even more profits. Otherwise, if they didn't have a good experience last time, they will escape your cycle and go to the competition. So these have been the three main key success factors for a retail business. How to know if a retail business is doing well? There are different KPIs that are used to give a guidance on how a retail business is performing. These KPIs include same-store sales, also known as comps or LFL growth. This metric shows if a retail business is growing on a like-for-like basis. Like-for-like means that only the sales of the stores that have been operational last year and this year are taken into account. It gives a good indication on the trajectory of the business, especially if looked at over multiple consecutive years. Another metric for assessing performance is gross margin. But as we explained earlier, different retail categories have different gross margins because it depends on the type of products and the frequency of merchandise turns. That's why assessing gross margins should be viewed in light of the benchmarks for the respective retail category and combined with other inventory metrics. Metrics related particularly to inventory are inventory turnover and gross margin return on inventory investment. They are combined with the other metrics, as we said, to give a better indication on the company's returns and how efficiently it's managing its inventory, which is usually the biggest asset for a retail business. The next metric is pre-tax profit margin. This gives an indication of the company's profitability after all expenses and before taxes. In the attached retail math formulas sheet, you will find all the formulas to calculate the metrics we've just mentioned. Finally, to assess the financial performance of the business, the three financial statements should be examined. Most of the ratios we've just mentioned are already calculated out of those statements. These financial statements are the income statement or P&L, the balance sheet, and the cash flow statement. The income statement gives a snapshot of how the business has performed during a particular period of time, for example, last year or last quarter. When combined with the balance sheet, we can see a bigger picture of how this business has been doing over the years. And cash flow statement shows us the movement of cash in and out of the business. Of course, there are also other metrics and KPIs that are department-specific and are used to further drill down into the business performance and find out what actually is happening and why. We get into the details of such analysis in our course on retail business performance analysis, so make sure to check it out when it's launched. There are two main areas to start a career in retail management: operational roles and commercial roles. We start with operational roles and get deeper into it because this is where the majority of people start their retail careers. Operational roles start at the store, and the entry-level position is the sales associate. There is typically no experience required for such a role. People who show a certain level of ownership and responsibility can then progress to supervisory roles. Then the next level and the first managerial role is the assistant store manager role. The assistant store manager is considered to be a store manager in training, as he or she shares a lot of responsibilities with the store manager. When the assistant store managers develop their leadership skills to the extent of being able to manage an entire team and take full responsibility of a retail store, they are moved to store manager role. The store manager role is one of the most important roles, if not the most important role in retail, because it's the link between the store and its team and the corporate headquarters. The next step after managing a single unit is to take responsibility of multiple units and then officially become an area manager or district manager. Typically, a district manager is responsible for 3 to 5 stores. A retail operations manager or regional manager manages multiple districts through their respective district managers. And finally, the director of operations is the one responsible for the entire store operations in all regions. As you go up this ladder, you will need to develop your leadership skills so that you can manage bigger teams and even multiple teams at multiple stores. The number of years of experience doesn't matter here as much as the degree to which you are able to influence other people to get the job done and how open they are to work for you. Many people get frustrated that they have been in the business for many years and seem to be stuck at one level and not moving forward. My advice to them is always to work on their leadership skills and show that they can actually lead bigger teams. When you start moving past the store level, you will start to need other types of skills in addition to leadership, and that is business acumen. When you aim to take a management role and start being responsible for cost centers with P&L responsibility, you will need to understand business, because now you will start to be a business manager rather than just team leader managing operational tasks on a daily basis. When it comes to commercial roles, these are roles in buying and merchandising. They typically start at assistant level, for example, assistant buyer and assistant merchandiser, and then develop into bigger roles and reach management level where the manager is responsible for multiple buyers or merchandisers for different categories of products. What matters in commercial roles is a deep understanding for the different products the business is selling and how they are performing and contributing to the business top line and bottom line. Particularly for merchandising roles, understanding retail math is very important, as well as being comfortable working with numbers and using advanced Excel functionalities to generate and analyze reports. Another career area within retail related to merchandising is visual merchandising. It typically starts at store level as visual merchandiser and then VM manager, and after that, just like operational roles, it develops into area visual merchandising manager and regional visual merchandising manager, where area and regional VM managers are responsible for VM across multiple stores. Working on the VM team requires being more creative and artistic. Starting a career in retail could be very rewarding if you intentionally manage your own career journey and know where you want to go and work on your own development. For me personally, it has been a very rewarding journey that took me to many countries around the world, attending fashion shows, dealing with suppliers, and sourcing products. It taught me how to deal with all the different kinds of people from different nationalities and backgrounds, and above all, it taught me how to think commercially and manage a business with all its different aspects. This brings us to the end of this introductory course on retail management. Thank you very much, and see you next time.